Hello, Warriors. How's everyone doing today? Okay, I think it's going to be K-Man and me, and maybe Mr. Confirmation will be with us today. Who
Mr.
knows who
Confirmation.
Mr. Huh?
Mr. Confirmation.
Yeah, do you know who that is?
I suppose Nick.
Huh?
I suppose Nick, no?
No, Steve Volke
Oh
is
no.
Mr.
Oh, no,
Confirmation.
no, no, I don't think so. Good morning,
Oh,
by the way.
okay.
Good morning, everybody.
Good morning, Kay. Michael, Sinatra, James, Bran, safely, yes. They're not warlike. I mean, check this little headline. Iran's guards commander, our hands are on the trigger. Israel's nuclear facilities have been identified. Okay, so tell me that's not a excuse the pun, a dark cloud hanging over us.
Hmm.
Hi, Glenn, Patrick, Laura, how are you? Marcus. Okay. Anyway, uh, let's just start with risk. Okay, so if you guys remember, I was talking about this 9-week moving average, which, hung tough for, you know, a week or two, where it held. And I said, this rally, uh, it would only take one bad candle to change the picture here. Now, there are a lot of people calling for a crash. I was just thinking 4,800 a couple weeks ago. So if that was an important area, and that was 51.49 at the time, and we do happen to get some kind of rally, where do you think supply is? So on your 4 hour, here it is. See how it kept held here, and sure didn't look like it was going to rally off this candle, but did. And actually, when you think about it, the high here in the S&Ps was March 24th, which was only a couple of days after the um, equinox. Okay. And then the eclipse was what, the 8th? So we were in here, and it was secondary high with a little spike here above it. But that's why I have the two dots here. So if we get a rally and S&Ps are coming in higher over the next couple days, that's your spot if you get a rally. Also, when you look at the weekly, or maybe it's a daily now. No, it is a weekly. You have a convergence of these moving averages. Hmm, I forgot what time TF it was on, but they come in around 51.20. Yeah, there's a convergence of them. Anyway, that's where I'd be a seller. We have a weaker dollar. Uh, that in euro, I know it's no trip to Hollywood yet,
Hmm.
but this was uh, 78.6. Now I actually think there's one more low and one more low in euro. And at least I would welcome it down to the mid to lower 105s, and that we get one more shot up in Dixie above this high, maybe towards 106.70. But I think that best guess is it's next Tuesday. Um, and,
What's
you have to
happening
talk.
next Tuesday?
I knew you'd ask me. Look up into the sky, and you'll
Ah,
see
okay, okay.
and you'll see a full moon. It's supposed to be pink. It's like, they have different names for this moon depending upon the culture that you came from, but thinking maybe that could be part of it. It shows up on the 23rd, which I think is Tuesday, isn't it? Or Wednesday? Um, so anyway, we have to look at yields, right? And they came off pretty good from that 468 level. So I don't know if we're going to have a failing rally or another high, but this is what's more important. And, when I was talking to Luke Roman, he's really focused on, and you could speak to this, K-Man, there's a new funding package announcement coming up, right? Treasury
Where
refunding
exactly?
package. Huh?
In the US?
Yeah, a U.S.
Yeah.
Treasury refunding package. Is that next week?
Good question. I will need to look it up, Dale. I
Okay.
haven't really looked it up.
Anyway, he thinks it's going to be a market mover like it was last time.
Mm-hmm.
When they tweaked it and went more short term.
Yeah,
But
yeah,
anyway, yeah. So anyway, you have this wedge line, and it tried to poke above it. And this is a lesson of not just buying a speed line or selling a trend, buying a trend line or selling a trend line just based upon the line. You still needed price action. So we got a little bounce off it, but the trade is once we get back inside of this formation, then you have a false breakdown. Okay. And the only thing I could think of that's going to drive the bond market would be, maybe what the stock market's say, that we have some more risk off coming. So pay attention to TLT. Um, that's important. Yields are important. And the 10-year actually got up to well over 61.8 was
Mm.
453. 78.6 is 474. So we'll see. I mean, it gets through 78.6. I guess you're talking about new highs in the 10-year yield.
Yeah, I've seen an article this morning. Vanguard, the big,
Yeah.
they are not ruling out a return to the 5% mark.
Okay.
That's their view.
Okay. So let's talk currencies here for a while. They
Yep.
tried to take U.S. dollar yen down yesterday a little bit, but it recovered pretty good.
Mm.
You think we have a top up here for a pullback? I
If
mean,
there's no intervention, no way. Then the market is going to take it higher, in my opinion.
okay.
But that risk has increased perhaps a little bit. We were talking about that. Suzuki and
He's
Ueda
home now.
both in Washington, and Suzuki met with Yellen and the South Korean fella. And they have the silent green light to intervene. So that is now on the table. And next week we got Bank of Japan.
Okay.
Tomorrow late evening for you, early morning for us, we do have the Japanese CPI. So I would say we are in an increased risk environment for interventions up to next week, Friday, or the day or the couple of days after. I I usually wouldn't really talk about interventions, but I think the fact that they wanted to make a point of talking about it very openly, and the fact that they don't like how the market reacted after the Bank of Japan decision puts us in a bit of an increased intervention environment. But without that, I think it's got to go back below 152 in a natural
Yeah.
way before we can say that the yen may be in for a period of more strength.
Do you think
That is
that
my view.
they came here and that also, which I brought up, and everyone said I was loony, that there could be Fed cooperation, U.S. cooperation with an intervention, that they can't jawbone it down like they did last time,
Mm.
and the U.S. helped by jawboning. I mean, we had a dovish Fed meeting at the last important high when the
Yeah,
Japanese were intervening.
yeah.
So I go
Mm.
ahead, go ahead.
But the thing is, the statement says they acknowledged the issues that Japan and Korea have with their respective currencies. They did not go any further. My base case is still that, of course, the way they intervene could be that they also ask ECB and the Fed to help them to intervene. But my base case is not for a concerted intervention, or not for an accord
U.S.
style intervention. No,
Yeah. Okay.
because the rest of the rest of the currency environment is not under such stress as the Japanese say that they are. So, or the
Yeah.
Koreans. I mean, yes, there are currencies which are suffering against the dollar right now, but not.
Emerging market currencies,
I'm sorry.
emerging market
Yeah,
currencies.
emerging market are some of them, although it's quieting down in on the Chinese side, but the rand is still above 19, but they have other issues. Mex is correcting a bit, going up. Well, we stalled above
Yeah.
17. It's hanging around there. Um, but they have absolutely zero reason to go into a concerted intervention. And Lagarde said something about the euro prices, but that was extremely vague. She sometimes reiterates that, perhaps just to keep the market on its toes. But there is absolutely zero reason for a Plaza or whatever style
Yeah.
accord right now to stop the dollar's advance. No,
Okay. All
I
right.
wouldn't think so. Get the euro dollar sub parity, I would talk differently.
Okay. Well, I'd like to see it. I'm not crazy about it. Was decent, the divergence. It was at 30, but if we had one more slam, uh, that would be a nice, a real nice divergence down there around
Yeah.
105.20. And Ryan brought up 105 as being uh, a big area for him and
Yes.
said, look left, and there is all kinds of action around that price. So um, that's what I'm looking to do. I already have some Dixie shorts from the other day with a
Hmm.
lead and took a piece, but I would welcome 100-point rally in the Dixie next week.
Yeah.
I'd sell it. So
Mm. Well,
copper's on. Go ahead, bro.
yeah, I've been a dollar bull for quite a while, right?
Yeah.
I'm going to let my actually my dollar yen call expires today. I'm letting it expire without doing anything further. I'm hedged. I've reduced my dollar Swiss. I reduced euro dollar. I'm really running on reduced positions. I'm kind of with you. I think fundamentally there's no reason to sell dollars right now. Interest rate divergence, there's very little reason to sell dollars right now, but positioning, and you need I think we need something fresh to get the market going. And I think we're still right now in a corrective phase. There is still another high, in my opinion, as well in the dollar. But then timeline wise as well, we are going to run into the end of that second quarter.
Yeah.
Um,
Yeah.
or in a while. And I've always said, like, end of second quarter, I really want to be cautious with what I'm doing with most of the currencies actually, and especially the dollar.
Okay. Um, yeah, getting a pop in the metals.
Can't hold them
Really
down.
tough to trade over, tough to uh, hold gold, any kind of short positions anyway,
I know.
overnight.
Yesterday,
Silver looks heavier.
yeah,
Uh,
yesterday at one stage I said, okay, I mean, because Israel said that they not planning to really retaliate hard against Iran until after the Passover, which takes us
yeah,
like another 10 days from now, is it? 11 days?
I don't know. I brought that up yesterday that I don't
Yeah,
think
yeah,
they
well, it's a
they
very good thing, and Israel said that they would probably hold off, and then you see stuff like, which has been bought on geopolitical risk called, is went down like what, 30, $40 yesterday, and then all of a sudden we're back to where we were, and to me it's still very hard to stand in front of this train.
yeah, gold hasn't traded like this. I don't know since the 70s with this kind of vol. I think
Mm,
there is a vol reading on gold, and we're near highs for a long time that we
mm,
haven't seen for a while. Platinum's kind of bringing up the rear, and that doesn't make sense with what silver's doing. I still think that you'll have a chance to buy silver right around here. The breakout was 26. Maybe the market won't give you 26, but here I would try it if we got down there. It shouldn't take a long time. I mean, if we break down here, this move from here is pretty big, right? 29.80, call it. So I'll call it 220. 220 from breaking this moving average gives you 26 bucks back to the
Yeah, but
breakout.
that's it. That's it, Dale. And that's somewhere what I have in mind as well, 26, 25. I think now we've got two big levels now, 25, 26, and 30 to the top side. And
Yeah,
I rather expect a bit more of a rangy market right now.
yeah,
Um, but I'll be happy to start rebuilding when we see that those 26 from 26 and a half or so down all the way down. I'm going to rebuild. But yeah, it's I think it's more of a range, and but it's I think gold is a very tough trade right now. Are we chasing it here? Not me. Can you stand in front of it? Not really. It's
yeah,
a bit like the dollar yen, You're not
yeah.
going to chase it at 154 and a half, but if they don't do anything, it's trading 160 before we know it.
I find that it was interesting when I was on with Pedro da Costa. He talked about how that emergency facility for the regional banks, they shut it down. I think it's pretty ironic. They may have to reopen it because look at this weekly chart. So we had a huge blow off in S&Ps and NASDAQ and everything, right?
Mm,
And to me here, it looks like all we had was a little corrective ABC
yeah.
back to resistance, and it's rolling over now, and this looks ugly. So don't be surprised to hear about some more bank consolidation or banks going under, and especially if the bonds take the other route. And the other route is this: if we're not going to turn here, and this isn't a correction, then TLT, um, and this is what I think Luke thinks they're going to do. He's in TLT puts. That would be that they break all the way back down under 80 for a third drive. That would spook everything.
Yeah, I fully agree. That would be an ugly move.
That would
But
spook everything.
weren't the regional banks now under more scrutiny, and don't they have to didn't they have to ramp up their liquidity buffers? I haven't
I
followed
don't
that
know.
story, but
You know what? Where did all the derivatives go from 2008 that were never written off? They just like throw them in a time machine,
yeah, just in one in one
and
big bucket, just in a
they
big
keep them
bucket,
off the book. Yeah,
repackaged in fresh mortgage deals.
yeah. Anyway, that's
Yeah.
so a couple of things that are out there. So you could have a strong economy, and what tips an economy could be something in the financial system, a hiccup, a financial issue.
Mm.
So I mean, the Fed, they don't think it's an issue if we just have three banks left after this is over. They don't care.
Yeah,
Um,
well, I mean, it's the same everywhere, in Europe. In Europe, the officials
yeah,
are talking in roughly the same way. They are not minding the
yeah,
regional banks to consolidate either, and the bigger ones to remain. Uh, but
and
yeah.
go ahead,
No,
go
no,
ahead.
I said no. I think, and since we're doing a daily show, just on the day, I think we are more in a bit of a bit of a range market right now, because as I said, I don't see too much of a reason for stuff going one way or the other. If you can pull up the Aussie just for a sec.
Sure.
Okay, we are turning around. Shorter term,
That's a
please.
weekly.
Yeah,
Okay.
shorter term, please.
So weekly, I'm still looking for this. Maybe this is a right shoulder here. But I'm going to buy one
Mm.
more low in
Yeah, go
Aussie.
on a
You're
shorter term.
probably bearish, right? Yeah,
Yeah,
that
for the
looks
time being, if
ugly.
you look at this, look at
Yeah,
this, you got to move down,
yeah,
and then you got a little bit
confirmed.
of a correction, another move down, bit of a correction, another move down. Okay, this could be like perhaps an ABC also, but if you look at the overall trend, it's still quite
down.
quite weak, right? For as long as
Yeah,
you stay under that 64.80, I think 64.80 is going to be a bit of a level there again.
yeah. Well, if it gets to this line that I drew, and I just gave a lecture on lines, you don't
Hmm.
just buy the line blindly. That now it's under 62.50. Um, I was thinking about this, this formation here takes you down there. So
Hmm.
you're right. Aussie's the ugliest, and Canada's the strongest, about to take out the October highs.
Hmm.
And
Yeah.
so
We're entering a little bit of a zone that for a simple continuation of this move should start to find bids on the dollar CAD, right?
yeah,
I think it,
yeah.
it
These are big levels here.
yeah, wouldn't be good for I don't think it would be good for the bulls if that goes back below 137.
Yeah. Okay. I mean, to me, someone asked me what this is, and this goes back to the fall of 22. Um, gosh, it's,
Yeah.
a year and a half consolidation,
Mhm.
basically a rectangle.
Yeah.
I'm not saying it can't blow, but this sure looks like distribution to me.
Yeah.
If
I
I didn't
could
know
we could
what
be in
we
there
were,
for another 2 years, huh?
no, I doubt it.
Yeah.
But we'll
Okay.
probably, maybe we'll go shopping for stops above this high. What's this high?
There you
People
go.
are, people have stops here. Uh,
Hmm.
so that's
Yeah.
38.80.
That would
That's where,
coincide with your last leg higher in the dollar as well, right?
yeah, that would.
Dale,
Okay.
we've got Nick here. Shall we bring him in?
Oh, yeah, sure, Nick. And I'm going to give you the screen I think Nick and I both got short S&Ps
Yes, we
at
did.
52 to 52.20. Nice trade, Nick. Uh,
Thanks. Yeah,
let's,
I actually just got out of most of it, or actually all of it, sorry. But yeah, I just got out of it, and I guess I can kind of show you guys why I am still bearish. Um, but I was just looking at that chart TLT, Dale, and I do agree with you. How if it gets lower, people would definitely panic. I'm starting to lick my chops though at the idea of a daily close above 90,
yeah,
getting back above here while we
that's
kind of
what I
did
was saying.
close near it. Yeah,
Yeah,
yeah. I
yeah,
think it could stretch, and I think that we've already seen quite a move in rates. Although the equity markets are just now taking notice, it kind of feels like that buy the rumor, sell the news thing, where I might try and take the other side now, given that we've gone from 6 rates down to 1 or 2. But just to dive into equities a bit, yeah, so if you take a look at the October 2023 lows to highs, we did make it to that
yeah,
23.6%, that fib here yesterday. And this level that we're at right now, and I'll go to the spot market cash SPX, this 5,000 level is massive, and you can actually see that in the options. So we got options expirations tomorrow, just this massive level right now. And I think that in the event we start to move lower, and we say we get like a close today below 5K, that would be pretty bearish. And I do feel as if support's at 49.75. But if we start closing around here, we're in a negative gamma environment and options. That's where I get a little bit nervous for equities, and I think it's so funny. Just like a couple of weeks ago, we were all talking about a blow off top, and now people are talking about a flash crash. It's just a crazy environment we're in. But I actually did just start a tiny small long, seeing if we can hold these lows. I wouldn't even mind building on a move down towards 49.75 or so. But I am hoping that it holds for a pop to sell into. And some of the reasons why I'm thinking that is we've had the Dow come down. Well, yesterday we actually didn't take out the lows of Monday, which was interesting because the Nasdaq and the S&P both did. And although the Dow's been the most weakest, it's showing some signs of life. Um, but from a Fib perspective, from the 2024 range, we did come down to the 786. We're kind of rounding out, or at least trying to at the moment. It's more consolidation, but we're just going to have to see if it can pop. I noticed that in IWM, we came down to the 38.2% correction from the October of 2023 lows. We're sitting there right now. So, you could see a pop from there. This could hold, I guess, is what I'm getting at. And I'm also, the equal weighted S&P for the 2024 range, we came down to the 618. And I think it's important to note that we've been in quite a bull move. And these corrections, I know this in the RSP is about 6% or so. And I know in the S&P in general that it's been about a 4.5% correction. So these are healthy levels to potentially see a bounce. Now, I do want, like I mentioned, to sell into that. I think the levels for just day to day, we saw that move. We saw us consolidate, spike above here. I think if we get above 50.80, you need to watch out for a move up towards 51.40 to 51.20 or so. I think, especially given how volatility has been rising, that's entirely possible. And, this chart looks similar to the NASDAQ yesterday, except the NASDAQ didn't get back into that range. It just kind of spiked up right around here. So we kind of know our levels right now. It's the lows and then back above these ranges, these range lows to kind of get things moving if it's going to happen. I'm not saying it is. Some other interesting stats that I've seen are, the CTAs have been ahead of this. And I've been trying to point this out on the daily roundup. When we saw the CTA selling at first, you can notice in the white line that, the general market wasn't, but CTAs were dumping. And they actually continued to dump into 2 days ago and yesterday as well. So that's accelerating. We'll have to see if they decide to get in shortly, which I imagine while we're near this big level in the 5K that we can. But like I mentioned, how I am looking for a bounce to sell into, I also found an interesting stat that in election years drawdowns since 1952, most of the time the average is actually a 13% pullback. And we could actually see that. Now, that would actually take us towards 4,800 or so, which is really where I'd like to be long. I'm kind of playing some shorter duration bounces right now. But I found that stat pretty interesting. And what has me so hesitant about feeling safe being long or so, trying to buy dips, is actually the fact that I think big tech could just be getting started. We have this Mag 7 composite chart that we're always pointing out, but it finally broke down from that support and it appears to be holding at the moment. You have stocks like Facebook that, from a weekly perspective, this is a chart dating back to 2017. We had a little throw over on the weekly and we tagged channel resistance. Now we've broken channel support. That doesn't look pretty. Microsoft as well. This fairly large chart dating back from January, we finally broke that 419 support, back tested it. We're moving lower. Stocks like Apple, I mean, if this thing, it rallied up to the 38.2, rejected perfectly, and now we're getting back down to this major support. If that goes, where does that put equities? I mean, you could even consider this a double top that extends, somewhere down towards 140. It's just not looking good. Tesla's still in that bear market. I think support, though, is going to be around 147. There's also a gap back here that I noticed, and I feel as if we get down there, this is going to be a good level to decide to try and play counter trend in Tesla. At least I'm thinking about it. But yeah, it's just we're in some pretty interesting areas. One other thing that I noticed in tech is that the triple Qs did close a gap yesterday. We had a fairly large gap from February that we did close, and we're just gonna have to see if it holds. But we're not getting to these massive extensions lower. In the NASDAQ, we haven't even tagged a 38.2% of the 2024 range. And ideally, we'd like to be buying more so at the 17K level for a deeper correction, which I think could be on the horizon. But as far as currencies go, I do agree with you guys. And I've been long dollars for 5 weeks or so, and I've peeled off most of it. I was hoping for an extension to see my alert sell. But I've been looking for us to get up here, and the main reason was this extension right here. This is what I was looking at for us to get up to, and we got up to it. Now I think that things could get interesting in the event that we get up there.
We've got data out there.
Oh, I'm sorry.
No, it's okay. But okay.
We have initial jobless claims, right?
Yeah, and the Fed. Initial jobless claims, nothing special. Philly Fed manufacturing index quite good, but the prices paid shooting higher. Employment index still a bit negative though. I'm not sure if the Philly Fed is really going to move a lot. Stel, did you manage to promote Sean already?
Hello, I just promoted Sean. Should be rejoining as a panelist.
Okay, just finish up then, Nick, because Dale is going to have his interview.
Okay, so I think things get tough if we start stretching above here. I think that coincides with the move below 106 in euro. I'd like to see how we trade below here. If we get back above 106 after a pop through, I'm likely to be a buyer, I think. I'm still short cable as well. I'm looking for a move back up to 125.40 to sell into and try and get my average lower to here. But that's pretty much as far as I'll go. I just think we got to be careful next week with earnings. And also Netflix on the close, we have a plus or minus 9% projected move, so things could get interesting. But with that, I'll pass it over. And thanks for having me, guys.
Yeah, and thanks for using a word that doesn't apply to trading. Safe.
Yeah, right.
All right.
Thank you, Dale,
and be careful. Anyway, okay. Thanks, Kay.
Hey,
Nick, I felt like I was listening to a recording of me a few times. Anyway, good job, and we have Sean with us.
All right,
Sean,
I'm gonna stop my share.
Okay, Sean, welcome back to F.A.C.E. How are you?
Yeah, good morning. I believe Anthony's also with us, but I think he's waiting to be invited as a panelist, maybe.
Okay, Anthony, if you're still here,
I'm doing that right now. I'm doing that right now,
thank
promoting.
you. You're like the Wizard of Oz. You're like the guy behind the curtain. So, I didn't even know you were here, and then all of a sudden, who wants to talk to the wizard?
Yeah.
So, anyway, Sean and Anthony are here. Sean, what's new? You think we have a top in the market here? And war drums, wars and rumors of wars. What are you thinking with these markets? Well, Anthony's here too now. Thank you, Stel. Okay, guys. Go ahead.
Yeah, very tricky market. And of course, our focus at geeksoffinance.com is more on looking at gamma and market positioning, which has really kind of changed my way of looking at things. I look at charts a little bit less.
All right.
Look at the positioning a little more. But
do you want to show what you look at that's changed you? Share your screen.
Well, let me. Anthony, do you have anything pulled up immediately?
Yeah, I can share my screen. Hello, everybody.
Hi, Anthony. Welcome back.
Yeah, nice to be here again.
Yeah. So. Hope that the spring is treating you guys okay. So there we go. We have the gamma exposure here. Okay.
Yeah, it's we noticed that gamma exposure, which is something we track very closely here. When gamma exposure is positive, you typically have lower volatility in the market, volatility compression. We call it buy the dip environments. Which is basically what we saw from November up until about early April 1st, April 2nd. We were in a positive gamma environment, basically, 95, 99% of the time. Well, gamma flipped negative, and that's what I'm showing here on my screen. We have our gauges here, and once we cross to the left side of the middle of this gauge here on the left, this is showing that we're flipping into a negative gamma exposure environment.
But
and we saw that happen on April 1st, and we've basically been in negative gamma since then.
Hello?
Can you hear me?
I hear you, Dale.
Okay, well, obviously he can't. So I wanted to ask a question. So we're entering negative gamma. But you're saying it needs to cross the halfway point, so we have to get to what is that? 0 up there at the top, or past there?
Yeah, good question. No, we've
to be
already
actionable.
Yeah, we've already crossed it. We've crossed into negative gamma territory early in April.
Okay. But when you were in positive gamma, do you shift your buy the dips to sell the rips at what point on the gauge? Because the one on the right went all the way, completed that whole circle. So you start, like right now, you're probably selling rips, right? Once that
Yeah,
starts to
exactly.
turn, you don't have to wait for more confirmation or for it to become more reinforced to grow, for the number to grow, right?
Correct. Yes. And yeah, the gauge on the right is highlighting implied volatility, which we factor in gamma exposure into implied volatility to come up with a custom indicator here. So this is basically looking at on a relative basis for the past year, what is implied volatility now? So we're at the highest implied volatility that we've been at in the last 52 weeks. So this to me says we're basically seeing a significant shift in the market. And so that combined with negative gamma exposure has been our indicator to, start, like you said, selling rips, shorting the market, leaning negative.
Okay. And does this apply across the board, or is it sector? Do you do sector analysis, relative
Yeah, we do.
strength?
Yeah, good question. We're looking right here. This is looking at the SPY. So this is,
Okay.
broad market ETF. We can look at specific tickers as well and do the same analysis.
Okay. All right. So,
Sean, you got anything to add to that? Any tickers you're looking at, Sean, that you want to mention?
Well, I've enjoyed we have a process of basically introducing ideas to our Discord members in the form of an educational portfolio, and that's been interesting for me to watch, especially Anthony. I'm just kind of new at the at structuring the trades the way that he is, but we've been using anything from butterflies to call and debit, call and put, debit and credit spreads. And so those combination ideas, I mean, we have like a butterfly on TLT right now. And then we just closed out a long Disney position, but we were also short Apple. So there's a combination of long and short ideas that we're finding that are both sector specific and, some of the broader indices.
okay.
So
What else
and
is on the
that's
menu?
been we've had like 3 months of 20% plus, including month to date in April, with kind of with the sum total of those ideas, which has been pretty nice to see.
Okay. So you do pairs trades and you do a lot of option strategies.
Yeah,
Well, why don't you
exactly.
explain what a butterfly is to our audience?
Yeah, I'll let
Butterfly
Anthony
spread.
take. I think Anthony does a better job explaining it, even though I could do it if I.
Okay, go ahead.
Sure. Yeah, so I mean, butterfly is a three-legged option structure where you are selling the middle contracts and buying the wings. So, for example, looking here at this SPY gamma exposure chart, if we wanted to target the 500 strike, which is where we see this big negative gamma exposure concentration, we actually, tagged that or got close to tagging that yesterday. If we felt like, hey, market's going to hang around this 500 level for the next few days, we could throw on a butterfly trade. We could potentially sell for example, the 500 puts, buy the 498 or 495 puts, which is one of the wings. And then the other side of the butterfly structure would be buying an upside put at 505. And so what you're basically saying is you're collecting premium if the SPY stays around this 500 gamma exposure concentration level. And so it kind of helps you narrow in your premium collection at a specific strike. And so we use a lot of butterflies if we think that price is going to like target a specific strike, within a short time frame, could be anywhere from 1 to 10 days. And we'll do those like weekly butterfly strategies.
Okay, so what are we targeting now based on your work? What strike?
So right now we've our initial target was 500, which has been hit, and we actually closed out half of our. We actually had a SPY put debit spread, so we had bought the 510 puts. This was early in April. We bought the 510 puts and we sold the 480 puts, expiring in the May 17th expiration. We closed out half of that position yesterday, just because we kind of hit our initial tag here at 500. But the interesting thing is we're now starting to see gamma exposure growing. These bars here were not here in the last week as prominently, and we're starting to see this growing at 495 and 490.
Okay, interesting.
So that's kind of signaling to us that there is, most of the interest, the short interest in the market was focused at the 500 strike, but now we're starting to see more interest coming in even lower. So this is signaling to us that probabilities are increasing for a continued move lower. So that's why we're keeping half of our SPY put debit spread position on. I'd like to see over the next couple of weeks. I mean, I think we may have a short-term bounce, but at some point, maybe just as a relief rally, 1-2%, but we would view that as an opportunity to short the market again, potentially for the next leg down, which could be between 490 and 495 as these gamma exposure concentrations grow down here, these negative gamma exposure concentrations.
So a debit spread, you bought closer to the money put and sold a further out of the money put, correct?
That's correct, yes.
So are those also called risk reversal trades?
No, that's not really it's almost just like an outright bearish bet. So it's basically you're saying if you're buying the 510 puts, you're basically saying I think the market or I think the stock is going to be below 510 before expiration. So it's a directional bet.
Okay, and but selling the 480 reduced your cost and limits your upside to 4,800. I mean, your profit potential.
Exactly. So we're basically saying, hey, we want to reduce our cost, and we don't think that the market is at this point is going to go lower than 480 in the next month. So it's a little bit of a trade-off there, how much we're paying for that put debit spread, and we're capping our maximum gains if the market does continue to go lower.
Okay. Nice trading.
Yeah, an interesting thing too is that sometimes on SPX and SPY, you'll see different gamma setups. Not completely opposite, but for instance, SPX is more neutral. It is negative technically, but it's but gamma's not as negative as SPY. And as Anthony was pointing out, though, we're still seeing a negative shift. We had a big gamma cluster for Friday that was at 5,300. Well, that shifted, and now the largest positive gamma cluster is at 5,100. And so that might be a rebound target if the market can find its legs in the next 24 hours. But, that may also, there's no guarantee we'll get there, obviously, because we do have these growing negative gamma clusters as well. But they do differ sometimes.
I've got the SPX pulled up here, and you can see there's a little bit of a difference. When we were looking at SPY, the biggest negative cluster was at 500, but when we look at SPX, we see a very large cluster at 4,800 as well as 4,950 and 4,900. So the structure is different on SPX, and so it's good to kind of compare these because you've got different market players in these different products here, like in the options market. So they're making different bets for different reasons, and it's just always good to compare what the gamma exposure data looks like in between. And so this to me is basically suggesting there may be more institutional players that have further downside projections, and they're making those bets here in the options market on SPX. So we didn't really see a huge negative gamma exposure on SPY at 480, but we do see a large negative gamma exposure at the 4800 strike on SPX. So that could be, a slight difference in institutional positioning potentially and retail positioning in the SPY, for example.
Okay, because I would bet that there's a huge volume difference in the options being much larger on SPY than on the SPX futures.
Yeah, it is. It is larger, but it's still. I guess it's just a difference in who's playing it, because it takes quite a bit more effort, I would say, in the SPX to put these type of positions on, especially if you're hedging in any way with futures or any of these other products related to the index itself.
Bigger spreads, not as liquid in SPX options.
Yeah.
Okay. Yeah. All righty. And this is mainly what you guys cover is mainly the SPY and SPX. Any other markets that you're focused on? It's okay. I sometimes people focus on too many things. So, what is it besides SPY trading? Do you do anything else?
Yeah, we tend to focus on the US-based tickers because
Okay.
that's where we're confident that our data sources are actually telling us accurate gamma levels. And we haven't quite cracked that code with some of the international markets, but we do have some.
TLT? How about TLT? Do you guys, track a yield instrument or a bond?
Yeah, that's interesting because I actually just had TLT pulled up. I could share that screen because we have a trade on right now with TLT. So it has a large negative gamma concentration at 90, which is above the current price. But we have a butterfly, a long call butterfly, where we have the 89, 90, 91. So we're basically betting that TLT hugs that 90 level. And we just initiated this trade this week, and we went from being down a couple of days ago to now we're up 50%. But it's such a small trade for us. We try to asymmetrically structure these trades so that if we lose the entire premium, it's not going to ruin our $10,000 educational portfolio. That's kind of what we're allowing everyone to track. But if it works out, it would definitely add to the total mix. So, so we do cover those, and it does have negative gamma. It is pretty close to the neutral. It's not deeply negative, but it is negative currently. So.
Yeah, I pulled it up here on the dashboard. Can you guys see that?
Yeah, we got it.
Okay, great. Yeah, we cover a number of different tickers. I'm glad you brought up the TLT because that's actually, as Sean mentioned, that's actually a position we have on. That's expiring tomorrow, that butterfly position, but we're targeting this 90 strike. So even though it's not at 90 yet, we've already, as Sean mentioned, collected 50% return on that initial 89, 90, 91 butterfly spread that we put on. But there's a number of tickers. We basically cover around 150 tickers, combination of ETFs and, large mega cap stocks, S&P 500, the most popular names that have a liquid options market that, you can trade a number of different strategies on, and you can analyze the gamma exposure on those very easily as well. So NVIDIA is another one that we're looking at. NVIDIA is always a tricky one to trade because there's so many people playing the options market. For us, it's been hard to get, especially the last couple of months, it's been hard to get an edge in any of this position because the options market's just been so rich in premium because so many people are playing it. But it's starting to look interesting here for, if the market has any kind of bounce, we think NVIDIA could be targeting somewhere in this 880 to 900 range. So it's not something I would make a large bet on, but if I wanted to capture a potential bounce, NVIDIA is an interesting way to play it because we see here there's large gamma exposure at the 880 strike and the 900 strike. So we actually put a trade on that it's actually a call debit spread, buying the 890 calls, selling the 900 calls. It's a very small position for us, but just as Sean mentioned, we like to put these asymmetric risk reward strategies on. So, low risk up front to us, but if it pays off, we'll get like 3 or 4x on our investment. So this is one of those things that's kind of like, hey, if the market does have a rally, an unexpected rally that's larger than what we're thinking, this will help, give us an opportunity to profit in that scenario. So, and we use gamma exposure to make those decisions. So we see these positive gamma exposure bars here popping up at the 880 and 900 strikes. And so that's informing that decision to say like, hey, this could be an opportunity here.
Okay.
Yeah, we just did that yesterday, actually.
So I see the purple, bar, but how do you identify the strikes just using this?
Yeah, it's down here on the x-axis, and if you just hover over, I know it's a little tough to see probably on my screen, but yeah, it tells you it's the 880, and you can see it on our other tab as well. We present it. This is this is a horizontal visualization of the gamma exposure, and we're just looking at absolutes just to make it easier. So we just want to say, hey, compared to the price action, where is everybody focused? Forget about whether if gamma is positive or negative for a second, but where is everybody focusing? What strike price is everyone focusing at? We can see that against the price action of the stock. So Nvidia's trading down here, 840, but we can clearly see there's a lot of focus here at the 880 and 900 strikes by looking at these bars. So just a different way to visualize it. I think it helps, to see it in various formats, so you can get a better idea of what's happening.
Huge volatility in precious metals. Anything that you're trading that is related to what's happening in gold and silver, or the miners, or it's really in the last months historic moves. So
we actually had a GLD position.
Huh?
We had it. Sorry to interrupt, Dale. Yeah, we had a GLD position that we closed out with substantial profits.
Nice.
And we do cover some of the other metals complex as well. But yeah, it looks like gold. It's been very positive. I mean, this gamma cluster at 220 for GLD is the largest one that's out there, and we're kind of in a dealer cluster zone where we might see some consolidation here. So
that's what it's been doing, it's chopping around since that spike. So
yeah.
Do you try and capture volatility? I'm sure they've pumped those options. Maybe it's already come out. The volatility has come out of them.
Yeah, we do try to capture volatility when we see a setup like that, and we'll use, like we mentioned, maybe butterflies if we think the price is going to hover around the same level. We'll use iron condors as well, and we've also put on some double diagonals, which is essentially is like very similar to a calendar spread.
Okay.
And it's just a way to capture that premium if you believe that price is going to hover within a certain range. On GLD, it's interesting because we saw that big spike up from the 190 area all the way up to 220 over the last, what's been like 3 or 4 weeks. And so we caught about $10 of that move with some call debit spreads that we put on. I think we traded GLD twice. It's kind of been hovering, around this 220. The volatility has been surprising. You can see implied volatility is at the 60% level, meaning it's 60%. It's higher than 60% of the time over the past 52 weeks. So definitely seeing more interest, more trading in GLD, and
a long time.
Yeah. It's interesting because it looks like market participants, at least according to Gamma Exposure, they're still focused on this 220 level, but there's quite a bit of interest growing at the 230 level as well. So this consolidation period potentially could give rise to another leg higher, in the 5% realm. So that's something we've got our eye on.
Okay. Well, Anthony, I could tell, you have great knowledge. You have to have it to put on things like iron condors and double
Yeah.
diagonals. And I was curious because I know some people pay a lot of attention to option sweeps for directions, for directionality, where the wise guys are putting on big bets. Is that important in your work, watching option sweeps
Yeah, and we kind of are able to capture some of that data.
in your gamma stuff?
Yes. So we actually
Okay.
have a 3D gamma surface model, which just helps us to drill down a little more granularly. Here, if you see my screen, this basically is showing us this three-dimensional visualization shows us the time element. So if we see, there's a lot of concentration, let's say at the 220 strike, well, when does that concentration, when do those options expire? Like, where's the bulk? What expiration is the bulk of those
Tomorrow.
options focused on? So yeah, we see April 19th.
Yeah.
And we see May 17th as well. There's another, if we just turn it here, we can see May 17th has a lot of expiration at 220 and at 230. So this looks to me like there's continuation for the next 3 or 4 weeks of people expecting price to trade between 220 and 230. Yeah. And so, that just goes as people are adding positions to their portfolios. This kind of helps us to see where market participants are adding. So right now, market participants are adding GLD calls, and that could be
2,300.
depending, could be long calls, could be short calls, and then we try to ascertain, the net gamma exposure on that based on that analysis.
All right. Well, guys, great presentation. I don't get a lot of people talking about options here, and in an intricate way, like you guys, really very amazing work, in my very accurate and humble opinion. So, how do people follow you? I know that Sean and you have different X handles. Where do you want people to go if they want to, get involved with you?
Yeah, we do have a Twitter account. I would almost say maybe joining our free Discord channel, which we share a lot of info there for free, and we also have a newsletter that we author on the weeknights. But if you go to our website, there's an icon at the top left where you can get into that Discord, and actually for a full week you have access to all the same channels that our premium subscribers have access to. And even after that, you can remain in the general chat. If you decide you don't want to join, which is fine, we still share a lot of free stuff, and we have a lot of good, kind of a good core group of people there that are also knowledgeable. And so it's been humbling for me to see some of the success of people in the group, and also to get some of the good questions and other ideas that people share. So that's what I would say. What about you, Anthony? Anything else you wanted to add?
Yeah, no, I think that's absolutely right. Discord is kind of our central hub. There's a lot of great traders in there, who have a lot of ideas. So we're all bouncing trade ideas off of each other. We're talking about the market. Really good core group of members and guests, who are sharing ideas. So we'd love to have you guys join us. Geeksoffinance.com's got all that information. You can link to our Discord or any of our social media just up here on the top left, and follow us, and yeah, check it out. We've also got, for our members, we actually have a free education course on gamma exposure, options trading, options strategy, portfolio management. It's a 5-hour course. It's free. It's included with all monthly memberships. So, if that's something you're interested in, we highly recommend like all of our members to take the course, because it's like really gives you a foundation for how the methodology works.
All right, guys. So Sean and Anthony, people know how to get a hold of you guys. A lot of people enjoyed having you here. I'll say thank you to you now for coming in and sharing your work with us. And
Yeah, thanks for having us.
yeah, I hope
thanks,
you guys.
Dale.
Yeah, I hope you guys have a great spring trading season, and we'll talk again in the summer.
Hey, sounds great.
What do you think? Huh? Should I bring these guys back? Come on, Laura. Let's take a vote. I say yes. What do you guys think? Huh?
Yeah, we're up
Yeah,
for it.
Laura says interesting. Okay. All right. So Laura rules. Tom says yes. So you're in.
All right.
Another great interview. This is my 1 millionth interview that I'm celebrating today. You guys
Is it
are
really?
my 1 millionth interview today.
Wow. Let's see. Let me do
No,
the math on that.
I'm kidding, but thousands anyway. I'm only
Yeah,
a
that's great.
thousandaire. I'm not a millionaire. I'm a thousandaire.
There you
So
go. The best way to become a thousandaire is to start as a millionaire.
Yeah, I've avoided that. So really, guys, nice work, and I'll get a hold of you guys, and we'll set up a day down the road. Good hunting. I'm pulling for you and all your clients, and that's it. Also, people think I did a million interviews. Anyway, okay. Feels like it. Anyway, guys, good luck. Good hunting. So my Trading Warrior brothers, Anthony and Sean, check them out. Remember, don't just count your pips or your strangles or your debit or credit spreads. Count your blessings, and we'll wrap up the week tomorrow. Adios, everyone, and thank you, guys.
Thanks, Dale.
All right.